Hi, welcome to Learn Domain. Today we are going to discuss about trade life cycle process. In any of the capital market process, trade process is a set of events and actions that occur once there is a purchase or sales of any financial asset. The first step in this process is the trade order called as, where an investor has spotted a lucrative opportunity in the market. They inform their broker and as well as bank of the trader they would like to make and at what price they would like to make it. This first step is called buy order and it also can be placed at the market price or lower. An investor may also place a limit order which indicates that he or he would like to buy or sell it at the price range or higher. After the order has been placed, the order moves into the second phase of the life cycle, which is called brokerage house and risk management check. Usually in this, to determine whether the order fits within the risk management parameters, risk managers in the brokerage house now conduct checks and calculations before the trade can move into the next step. In determining whether the trade is safe to make, one of the things they look at it is whether or not the investor placing the order has sufficient capital in the forex market to cover the security and limits. So once the order passes this examination, it is then ready to move on to the third stage, where we call it as finding a match. Within a seal approval from the brokerage house risk management departments, it's time for an order to move on to the next foreign state exchange. Note that when an order has to buy is solid, so too will an order to sell from one who has the currency to sell. The seller side order has to go through the same risk management procedure until it is then sent to the exchange. After the order has been sent to the exchange, it's time to find a match for the order. When anyone places an order to purchase an asset, the only way for the trade to come to fruition is if there isn't someone on the other side looking to sell that asset. It is at this time the exchange searches around the perfect order after the match trade order within. Once this deal matches has been realized, a trade finally materializes and we jump right to the next process, which is called confirming the trade and as well as post-trade process. In this, the match has been made and the exchange immediately delivers the pertinent information to the brokers for confirmation. So the brokers to let their client know about the trade execution, and with this notification of the match in orders, it's time for the confirmation phase. Even after all the stages as well as the steps, what is that the trade, this is now actualized to still needs to be confirmed. Brokers on the both side of the trade, either from the buyer side or seller side, will make sure their clients agree with the specific of the trade. These details including which securities are being exchanged at what price and which date the settlement will occur. Once all the specifics have been accepted by their clients, the brokers will pass the trade to their back office teams and pave the way for the clearing houses portion for the newly confirmed trade. So when we're talking about the next step, which is called clearing houses, once the trade is in the clearing house, it's time for them to calculate exactly what is needed from each side of the trade. The trading house then informs both sides of that what is it needed. It's also the job of clearing house to ensure all the obligations are met by both sides. At this phase, traders are given a letter and number in order to quickly reference them. The most common way to trade is T+2, in which T stands for transaction date and 2 represents the number of days of the transaction date which the settlement will take place. In this case, T+2, it means the settlement will take place 2 days after the transaction is being moved. Moving its way through the clearing houses, now it's time for a trade for experience in the final stage, which is called sixth step, called as settlement. Usually after 2 days of the transaction date, the settlement date finally comes. This day in which the currency pairs are officially exchanged between the two parties. However, the transfers does not occur directly between the two traders. This clearing house will receive the securities or money and move them into the accounts they have set up for their respective clients. So these clearing houses deliver detailed reports to their clients and trade life cycle is complete. So this is what the whole understanding about trade life cycle in reference to the capital markets is all about. For more information, please reach out to the contact details which will be posted in below to this video. Thank you.